One Dow component posting earnings after the closing bell tonight was the telecom giant AT&T. The nation's #2 wireless provider made 62 cents a share, excluding certain items. That was a 1 penny a share miss. Revenues also rose, but were also short of Wall Street forecasts, even though it saw a record low number of subscribers leaving the company. Shares initially fell a bit in after-hours trading. As you see there, they finished the day at $35.88. Morgan Brennan here now with more on AT&T's second quarter earnings. Nice to have you here. What did you see in the numbers that stood out?
Well, we've seen so much competition among the U.S. wireless providers, and I think that's what's showing up here in AT&T's earnings. Now, the company had the strongest wireless subscriber growth in 5 years. They had the most subscribers staying on and not leaving the company, as you mentioned, ever in the history of the company. And yet we saw profits down. And the reason is because you have T-Mobile and you have all these other competitors that have been slashing prices and putting pressure on AT&T to slash its prices. It's also been moving away from subsidizing smartphones and in return for 2-year contracts from customers to having customers pay for their smartphones but pay less for services. And all of that is weighing on the profits for AT&T. This company is really transforming itself right now. We're going to have to see what happens in the second half of the year.
Morgan, thanks very much. Morgan Brennan reporting tonight. Well, telecom is the smallest sector in the S&P 500, accounting for only about 2% of its total weight, but it's got some of the biggest companies in the country in it, like AT&T. There just aren't a lot of them. So are any of them worth your investment dollars? Here to answer that question in light of the earnings from AT&T today and Verizon yesterday is Craig Moffett, founder and senior analyst of his own research firm, Moffett-Nathanson. Craig, welcome. Good to have you with us. Before I get to the specific pick that you like best in this sector, how do you rate the sector overall? Do you like it, not like it?
I think right now you'd have to say it's at best fairly valued. I've actually been relatively negative on the sector for the last 18 months, where I think it was very, very expensive 18 months ago. It has badly underperformed for the last 18 months, but even after that underperformance, it's still only in line with historical averages, and I don't think you can begin to say that the sector is actually cheap enough to get excited about.
What is your choice in this sector? Is it one of the big two, AT&T or Verizon, or is it a third party?
No, I think right now AT&T and Verizon still haven't gotten to levels where they make sense to own. And as Morgan was saying, there are actually a lot of weaknesses that are on display in AT&T's earnings in particular. Those results were actually pretty bad today. I think if there's a name to buy in the sector, it's still T-Mobile. Now, there's a lot of questions about whether T-Mobile will or won't be acquired by Sprint, but on at least in intrinsic value, and if you look at the one carrier that's actually growing its business and doing it profitably, it's actually T-Mobile.
And you say, though, that you give the likelihood of a T-Mobile-Sprint combination a very low probability of clearing the regulatory muster. Apart from that, do you think it's a good business idea?
Well, sure. Look, I mean, if you can consolidate a business that has 4 players down to 3 players, it doesn't take a rocket scientist to realize it's probably an attractive thing to do. The challenge is the Department of Justice and the FCC have been pretty clear in saying, if you'll forgive the reminder, read my lips, we're not going to go from 4 to 3, and it's very hard to see how, given how entrenched the Department of Justice and the FCC are today, how we're going to get to a merger.
Thank you very much, Craig. We appreciate it. Your pick, T-Mobile. Craig Moffett with Moffett-Nathanson.